Okay, so in today's video, I'm going to recreate one of the setups that we had in my extra chart section, and this is JP Morgan, a daily chart. It's where we found support at 291.10 to 291.71. There was also other support, but we never met that area. But it hit, it held, it triggered on a lower time frame chart, and we've almost met two targets on the upside here. Okay, target number 2 is 313.62. We're just short of that. That's a rally of 21.81 so far. So we're going to go to a blank chart, and I'm going to show you how I came up with that. So here's the blank chart. And what I'm going to start with here are the symmetrical projections. Basically, using 100%, and I'm taking these prior high to low swings within this uptrend, and I'm projecting them from the high that was made at that time, okay, because this is what helped us find the setup. So let's start with that. We're using the three-pointed tool. Let's click on this high to low and project from this high. Okay, so that came in at 291.71. These are too small. I can tell visually that we're already through that, so I'm not going to bother running these, but I'm going to run this one because it looks more similar. Okay, so low, high to low from the high. Those are right on top of each other. Let's try this next one here. High to low, projected from the high. Okay, another high to low, projected from the high. Now I think that's all we're going to have as far as symmetry projections using this last swing here. Okay, so what else are we going to look at? Well, let's look at retracements. Do we have any retracements that we can look at? Well, we would have had this prior low to high swing, this prior low to high swing. You could also run some from back here, but I think it's going to be overkill. So let's just do the most recent swings. Let's run this retracement low to high. Okay, and then you can see that we did go through a 618 retracement, but we did stay above a 786 retracement. And then if I use the slightly larger swing, where is that going to come in? Low to high. Okay, there is a 618 retracement that comes in a little lower. Now you can use this one too, okay, but it's so close to where this one is, it's not going to be that much different. Let's just go ahead and add it. So low to high. Okay, now we're going to get rid of any of the levels that the market already went through because, you know, they don't help us. We went through them, right? So let's get rid of those, and we're also going to get rid of the levels near the bottom of the chart, okay, because they're not helpful either. All right, so next, what else? Did we have any price extensions? Well, we did. We actually could have taken this low to this high and extended downwards and see where that comes in. So here we have this low to high. Okay, we're actually using the retracement tool, but we're including the 1272 and the 1618 and the 2618 as far as those, you know, those levels. You know, the retracements and the extensions are actually on the same tool. So, for example, here you can see here's the retracements, and then what's essentially a retracement beyond 100% is what we call extensions. So 1272, 1618, and 2618. Okay, but bottom line, this is, you know, how we came up with that setup. Looks like we still have 291.10 to 291.71. It hit, it held, it triggered, and that's the way we set up trades using Fibonacci ratios. If you like these videos, please like and subscribe.